Hello, good morning, and you're watching Market Cafe on ET now with me, Vinny Motiwala, along with me, Sneesh as well. Sneesh, very good morning to you as well.
Good morning, Vinny.
Markets yesterday were a bit of a woozy, nothing exciting below that 20,000. Gift Nifty now, right now also indicating a bit of a subdued start, red start. What is the global handover coming in today, this morning? Should we expect some bit positive signs after the FOMC meet or nothing exciting there?
Well, Vinny, that's one important cue to watch out for. Good morning to all our viewers as well. And the biggest thing that happened overnight was the US Federal Reserve announcing its interest rate decision after a two-day Federal Open Market Committee, that's the FOMC meeting that was held. Now, the FOMC has left the benchmark interest rates unchanged at that 5.25 to 5.5% levels. US Fed Reserve Chairman Jerome Powell led FOMC was widely expected to keep the interest rate unchanged after having raised its policy rate by 525 bips since March of 2022 to the current 5.25-5.5% range. Despite persistent US inflation, those levels were exceeding the central bank's targets range, while the US economy remains resilient. Now, on the back of that, stock futures traded near the flat line on Wednesday night as investors passed through the FOMC's projections made earlier in the day. In after-hours action, FedEx gained 5% after the delivery company posted adjusted earnings of $4.55 per share in its first fiscal quarter. This was above analyst expectations, note that. And marketing automation firm Klaviyo, which debuted on the public markets Wednesday, slipped nearly 2% after the closing bell. Now, these moves follow a bleak ending to Wednesday's trading session. The three major averages closed at session lows after the Federal Reserve said it would leave interest rates unchanged, but expects another rate hike before the end of the year. Now, we will obviously talk more about the FOMC outcome in the course of the show. Fed Chair Jerome Powell has also commented that a soft landing for the economy was still possible, but not his baseline scenario. The S&P was down almost 0.2%. Dow Jones was also down 0.2%. Nasdaq took the sharpest cuts, 1.5% down. S&P was down almost 1% in trade yesterday. Now, the additional economic data awaits traders on Thursday, with weekly jobless claims due before the opening bell, as well as existing home sales data out later that morning. So this is largely what is happening on the US markets. The handover coming in largely weak for us this morning. Shifting focus to European markets closed higher on Wednesday as global investors awaited the latest decision from the Fed. Remember, the European markets closed before the FOMC came out with its outcome. Now, the Pan-European Stock 600 index closed up almost 1%, with most sectors gaining. Auto stocks led gains with a 2% uptick, while oil and gas dipped 0.6%. Now, what's key to note is UK inflation came in below expectations on Wednesday at that 6.7% mark for August, down slightly from the previous month. Economists polled by Reuters had anticipated a headline figure would come in at 7% annually. On the back of that, FTSE was almost up 1% in trade as well. So, negative handover coming in from the US, Winnie, but largely positive coming in from Europe. Let's see how this pans out for us this morning. But while this was on the equity front, Winnie, take us through what commodities have done.
So on the commodity front, what we're seeing is a bit of a easing that came off on the crude front, right? It reached near that $100 per barrel mark, but finally it's coming off and easing off. As of now, when you're looking at the Brent crude also, it's down almost 0.5% in trade. Brent crude oil is trading around the $93 per barrel mark. WTI crude oil is around the $90 per barrel mark as well. And obviously, what is coming in is after that FOMC decision, we saw a bit of a correction coming in over there. Also, Saudi has cut the Asian premium after India taps the Russian oil market as well. So crude oil inventories, that has fallen, and they are standing at around 2.14 million barrels. EIA says that, the Brent crude oil prices at 93.14 per barrel after hitting peak that we saw of around $95-96 per barrel as well. So that's how it is looking like in terms of the oil prices. Mainly that fall after is coming in ahead of ahead of other central banks also that could be taking some bit of a hike, or are they going to be pausing their rate hikes? That is an important decision that everyone is watching out for as well. So let's keep an eye out on Brent crude oil prices as well. And when you're looking at the gold prices also today, this morning seems like the correction is coming in the gold prices this morning. Gold is around that 1,946 ounce per mark as well, down almost 1% from overnight. So let's keep an eye out on that. Crude oil prices too seeing a correction after that. So yes, interesting to watch out both these, especially on the commodity front as well.
Absolutely, Vinny. We will be keeping an eye out on all of these indicators. With that, let's also take a look at all the important cues that you should be keeping on your radar this Thursday morning. And well, because it's Thursday, it is the Nifty expiry today. And globally, you've got the Bank of England policy meeting that will take place today. So keep an eye out on that. On the corporate action front, then back home, buyback offer will open for BSE, and that is priced at 1,080 rupees per share. Also, you've got Vedanta. The board will consider the proposal for issuance of non-convertible debentures today. So that stock will be in focus. And when it comes to the primary markets, then you've got EMS. That's the new IPO that will be listing on exchanges today. So keep an eye out for all of these cues today.
So let's move on and talk about more global updates that have come in. And as always, markets across the globe will be reacting to the Federal Reserve's policy stance. A hawkish pause in September is what we saw. Now, however, Chairman Jerome Powell did not shy away from indicating that they still expect one more hike before the end of the year and fewer cuts than previously indicated next year. If the Fed goes ahead with the move, it would make a full dozen hike since the policy tightening started since last March and last year in the month of March as well. And now on that note, let's actually also hear out an excerpt of the conversation and the speech that Chairman Jerome Powell did have.
Recent indicators suggest that economic activity has been expanding at a solid pace. And so far this year, growth in real GDP has come in above expectations. Recent readings on consumer spending have been particularly robust. Activity in the housing sector has picked up somewhat, though it remains well below levels of a year ago, largely reflecting higher mortgage rates. We will continue to make our decisions meeting by meeting based on the totality of the incoming data and their implications for the outlook for economic activity and inflation, as well as the balance of risks. Given how far we have come, we are in a position to proceed carefully as we assess the incoming data and the evolving outlook and risks. Real interest rates now are well above mainstream estimates of the neutral policy rate, but we are mindful of the inherent uncertainties in precisely gauging the stance of policy. We're prepared to raise rates further if appropriate, and we intend to hold policy at a restrictive level until we're confident that inflation is moving down sustainably toward our objective. In determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments.
Well, that's the word coming in from Jerome Powell, but the central bank frenzy doesn't end here. Next up, all eyes are on the Bank of England. Now, what's left to see is which way the Bank of England heads after a significant uptick in the August inflation print. UK inflation, which unexpectedly dipped to 6.7%, defying a consensus forecast to the rise of that 7% mark. Now, the probability of holding rates steady at 5.25% rose from 20% to more than 57% after the inflation print.
And staying with the macros, the Central Bank of Brazil has lowered its benchmark interest rates by half a percentage point to 12.75% for the second consecutive time. Largely in line with the expectations, the central bank has also hinted towards further cuts of a similar magnitude over the next meetings. The board also mentioned that the pace of rate cuts will be in line with the deflationary process.
And speaking at the United Nations, Japanese Prime Minister Fumio Kishida flagged concerns around the country's economy, saying the situation continues to be unstable. Thereafter, he also promised to unveil a new slew of economic measures next week as citizens remain dissatisfied with the pain of the rising prices.
And some updates coming in from Japan, shifting focus actually to New Zealand and shifting focus over there to the country's GDP that rose to 0.9% in 3 months through June, higher than Wall Street's 0.4% estimate was. Now, do remember their Q1 GDP was revised to unchanged from a 0.1% contraction, meaning the economy narrowly avoided a technical recession after shrinking in the final months of 2022.
And India has taken one more step towards creating history. Now, the dream of women reservation in the Lok Sabha and state assemblies is in sight as the Lok Sabha passed the Women's Reservation Bill yesterday, which is named Nari Shakti Vandana Adhiniyam. During the special parliament session, 454 MPs voted in favour of the bill, while 2 MPs voted against it. The voting proceeded by nearly 8 hours of discussions, which saw leaders from both the opposition as well as the government expressing their views on the bill. Listen in to the Lok Sabha Speaker Om Birla on the historic passing of this bill.
शुद्धि के अध्ययन मत विभाजन का परिणाम इस प्रकार है। हाँ 454, 454, 454, ना 2, प्रस्ताव सभा की कुल सदस्य संख्या के बहुमत द्वारा तथा सभा में उपस्थित और मत देने वाले सदस्यों के कम से कम 2/3 बहुमत द्वारा पारित हुआ। अब खंड 2 विधेयक का अंग बना।
Okay, and on that note, we're going to submit a very short break, viewers. Don't go anywhere. We'll be back with more updates on the domestic front, important stocks that you should be keeping on your radar this morning. So don't go anywhere. Welcome back, and you're watching Market Cafe on ET. Now, this is a show where we get you all the updates and get you prepared for what you should be watching out in the markets today, what's going to be important for you before the markets start. But let's move on and talk about what's happening to Go First. Now, according to sources, lenders of the crisis hit Go First Airline have actually extended deadline for the submission of expression of interest to September 28th. Let's go across to my colleague Ankur Mishra, who's picked up some more details on this front. Ankur, what is happening in this Go First case? What is the expression of interest, the deadline? What is all the update that you have on that front?
Yes, sources say that Go Air lenders have extended the deadline for EOIs because there has been limited interest which was shown by the potential bidders so far. In fact, if sources are to be believed, some of the bidders had expressed reservation for submitting the EOIs within the earlier deadline, and hence a request was made for extending EOIs once again, and this is the second time that expression of interest deadline has been extended by the lenders. Now, as far as the current process is concerned, we understand that the latest deadline is September 28, by which the potential bidder needs to express the interest for buying the company, and after that the prospective resolution applicants will be finalized by the lenders by October 8th, and later in the month we understand that final bids may be invited for Go First Airline. Now, the airline has been trying to revive itself to fly in sky once again, but due to operational issues as well as the pending litigations which are there in various courts, the operational issue has not been sorted, and it is yet to revive itself in form of operational ability as well as the resolving the debt. Lenders are seeing to resolve a debt of over 11,600 crore. In fact, if sources are to be believed, the overall debt could be more than rupees 20,000 crore due to claims which have come so far from operational creditors. But as far as the financial creditors are concerned, the total debt is more than around 6,500 crore, which includes lead creditor Bank of Baroda as well as Central Bank of India.
Well, moving from one airline to another then, Akasa Air addresses the pilot crisis head-on. Acknowledging industry-wide pilot shortages, the airline reveals a robust 10-year plan for training, partnerships and a cadet program in the works. In a statement issued by Akasa Air, the CEO Vinay Dubey of Akasa Air announces the airline's designation as an international scheduled operator by the Aviation Ministry, that's the MOCA, aiming to commence international operations by year end. My colleague Sameer Dikshit is joining in with more details. Good morning, Sameer. What are you picking up?
India's newest airline, Akasa Air, is going through a deep state of crisis, and this is all because that more than 40 of its pilots have left the airline and probably have joined the rival airline, which is Air India Express. Now, Akasa Air has approached Bombay High Court as well as Delhi High Court and has sought urgent intervention into this entire case. In its appeal, Akasa Air has mentioned that stay has to be issued so that the pilots which have abruptly left the airline, they serve the mandatory 6-month period. Akasa Air has mentioned that this 6-month period of the service, the notice period which has to be served is mandatory, and that pilots are not serving, and because of which there has to be a stay order, and which will help the airline to maintain its operations smoothly. Not just this, in the meanwhile, Akasa Air CEO Vinay Dubey has written a letter to employees and mentioned that during July till September, the flights were disrupted immensely. What we are getting to know from our sources that more than 1,000 flights have been cancelled of Akasa Air because of this pilot crisis, because of number of pilots leaving the Akasa Air and now going to some other airline. And not just this, not just during the July till September, it is very likely that this flight disruption or the cancellation of flight may continue further, because in the letter written by CEO, it is mentioned that now airline is looking to rework the entire network operations. And this simply means that the impact will be seen for as well, and especially during the festive period. In addition to this, the airline in its official statement has mentioned that though this problem is there, but airline is working with the key stakeholders like Boeing to have a pilot training program. A set of pilots will be ready very soon to serve 30 of its aircraft. But this problem will be overcome once the new set of pilots are being inducted into the airline. In addition to this, the airline has shown its commitment to start the international flying operations before the end of this year. Akasa Air has mentioned that they have got the designation of international scheduled operator from the Ministry of Civil Aviation, and they will soon start flying the international flights as well. Also, Akasa Air has reaffirmed that they are going to place a 3-digit aircraft order by the end of this year, and this will reflect that the airline is growing and expanding as was the desired plan.
Okay, thank you so much for that. But let's keep it with Akasa Air, and it's the acute shortage over there. And go first. Unused flying slots might actually impact the airfares in the coming festive season. Now, estimates say that it can actually lead to an increase in the prices by 20 to 30% jump in these airfares. Let's go across to ET Now's Sumit Chaturvedi, who's joining in with us to get us more details on that. And, is this airfare actually going to be a party pooper this festive season, Sumit?
Troubles for Akasa at this moment is not the good news for flyers who may be looking at flying in the coming festival season or the winter season. Sources tell us it can lead to jump in airfares of 20 to 30%, especially on the critical sectors. It will be also because Go First flights have not resumed, even after assuring again and again that it will be able to take back to skies. So these troubles will clearly lead to jump in airfares. Also is the rise in ATF prices. This all can lead to jump in airfares in the coming busy season. You know that Akasa Air is having problems now. Around 1,000 flights have been cancelled so far. Around 24 flights are being cancelled every day. 40 of its pilots have quit. They have gone to rivals, and Akasa has dragged them to court over this issue. However, the pilots are in no mood to relent so far. It will lead to further troubles. Akasa was in a way of expansion, and it was coming to fill in gap which was there by Go First airline, but it looks like it's not going to happen, and it will lead to jump in airfares, which can be as high as around 30%.
Well, thanks, Sumit, for taking us through that. Now, let's get a move on then. And the Indian Railways are struggling to meet the 75 Vande Bharat trains target before the Lok Sabha elections. Now, ET now has learned from sources that PM Modi is likely to flag off more than 6 Vande Bharat trains on September 24th. My colleague Samir Dikshit is joining in with more exclusive details on this. Samir, take it away.
Good news from the railway sector. Prime Minister Narendra Modi is likely to flag off 6 new Vande Bharat train on 24th of September. The interesting part is that we are getting to know from our sources that more than 6 new Vande Bharat trains will be flagged off by PM Modi, and it will be a virtual flag off by Prime Minister. And these new Vande Bharat trains will run on the routes. Likely routes include like Jaipur, Udaipur, Jaipur, Chandigarh. Even the election bound states will get Vande Bharat train. Odisha is also likely to get a Vande Bharat train like Puri Raurkela. Chhattisgarh and Madhya Pradesh, where elections are likely to take place very soon, or these states will also get a new Vande Bharat train. Southern state will also get a Vande Bharat train, like it will be Kasargod to Trivandrum. So that route might also get a Vande Bharat train as well. And this southern state will get the first Vande Bharat train designed and conceptualized with a new color theme, that is orange and white color, which is getting a good traction on social media. So that Vande Bharat train is likely to run between Kasargod and Trivandrum. Sources have informed that it is likely that 8 or new Vande Bharat trains will be flagged off by Prime Minister Modi. As of now, 25 Vande Bharat trains are running on tracks, and with these new Vande Bharat trains, the numbers is likely to reach to around 33 or 34. But still, if you see the larger picture, the Railway Ministry is lagging behind its targeted timeline of running 75 Vande Bharat train till August this year. Now, Railway Ministry, the sources have informed that the production has been escalated and these numbers are likely to be achieved very soon.
Thank you so much for that, Amir. But let's move on. And the IT Ministry actually held meetings with over 40 stakeholders, including tech firms, startups and think tanks. And this is to a concrete timeline for the implementation of the Digital Personal Data Protection Act 2023 is what they're focusing on. Let's go across to Sumita, who's joining us with more details on that. Sumita?
Weeks after the Digital Personal Data Protection Bill, now an act, was passed in Parliament, stakeholders from the industry, including startups, smaller companies, big tech companies, MNCs, and in fact, tech policy think tanks came together to discuss a graded rollout of rules, including government officials. In fact, what was discussed at the meeting, which had over 40 stakeholders? Number one, that the initial rollout could cover rules like notice, consent, data breach reporting, and not all rules will come out in one go. It will be phased. Number two, the law will be first implemented for big tech companies and a longer transition timeline will be given for smaller entities. The government is also very keen on setting up the Data Protection Board as soon as possible. In fact, it is also interested and it has also indicated that it is very keen on implementing these rules as soon as possible. Regarding global MNCs, which have greater familiarity with global GDPRs and have a better understanding of the processes that need to be put in place, so they have an advantage over smaller startups, but now they have to find out more gaps where more clarity is needed. For example, verifiable parental consent. What kind of mechanism will be needed for this? What kind of tech will be needed for this? Because remember, there's no standardized method for this. Relevant tech solutions will also need to be implemented for other areas like the right to erasure, how to implement this at scale, and what relevant technological solutions will need to be made available. So those are some of the things that were discussed. In fact, the government is also holding discussions with industry stakeholders to look at specific requirement and has asked industry to identify areas where, in order to comply with law, certain dependencies will need to be found out. The government, like I said, is keen on setting up a data protection board. In fact, the industry has also indicated that certain areas will require guidance and hand-holding on some good and bad practices, timely and whenever required. Remember, the time frame that will be set up for some companies that are not fully digital will also need to be identified.
Well, thanks a lot, Samita, for taking us through that. Now, moving on, amid rising power demand, the government has allowed power generating companies to sell power in the open market post the expiry of PPA, that is the power purchasing agreements. Power Ministry has withdrawn their previous order imposing restrictions on power sale as well. Prakash Priyadarshi filed in this report earlier with all the details on this. Prakash, take it away.
Yes, an important development coming in. Amid rising power demand, the government has taken various steps to ensure sufficient availability of power in the market. But yet another important decision has been taken. Power Ministry has allowed power generation companies to sell power in open market after completion of a power purchase agreement. As you are aware that few months ago, Power Ministry has issued an order which enabled DISCOMs to continue drawing power from power generation companies even after completion of power purchase agreement. But there were some anomalies in this provision which was brought into the notice of Power Ministry, and now it has been decided to allow power generation companies and discoms to take their own business decision, and power generation companies would be allowed to sell power through in open market, through exchanges, or through any other medium as per their business viability. So it's a big development coming in. Apart from that, it has also been decided to initiate a new scheme in order to ensure higher availability of power in the market. It has been decided to create a common pool, which means that PSU power generation companies where power purchase agreement is not available or it has already been expired, it has been decided to brought into a common pool, and as per the scheme, a uniform tariff will be decided, on which that will be allowed for every consumer or every power purchaser come forward, approach this pool and purchase power as per their requirement according to the availability. So states where there is power deficiency or shortage or higher power demand can approach this common pool to purchase sufficient power as per their requirement. So it's an important development coming in, and these all efforts are being made to ensure sufficient availability of power in the market. As you are aware that as per the Power Ministry's estimate, power demand is expected to go further high in forthcoming festive season.
Thank you so much for that, Prakash. Let's move on to an ET Now exclusive, and there is a new twist in a Cipla promoter stake pot boiler. We learn from reliable sources that Blackstone has actually pulled out of the race. Let's go across to my colleague Anurag Joshi, who's joining with us with more exclusive details on this. Anurag?
Yeah, that's correct. So Blackstone has pulled plans to acquire 33.5% equity holding in Cipla, which is held by the promoters of the company. That's the Hamid family. The key reason why Blackstone has pulled out from the race is because it perceived the purchase cost for Cipla, which is said to be around $7.3 billion, to be too high. Blackstone had put a non-binding bid for the stake in Cipla. So that now leaves a key contender, which is Torrent Pharma, as a contender for the promoter stake in Cipla. And Torrent Pharma is scurrying to put together a private equity consortium. They're trying to bring in additional investors into the deal because the deal size, the sheer size of the deal, which is over $7 billion. They've tied up $4.2 billion of financing. This is what our sources are telling us. That includes a $3 billion syndicated loan, and $1.2 billion will be a promoter financing, which will be loans against the pledges of shares in the Torrent Group companies. The third contender, which is also looking at the deal, is Dr. Reddy's Labs.
All right, thanks Anurag for all those details. With that, let's quickly slip into a very short break. But on the other side, we'll take you through the FNO setup for today. Remember, today is the Nifty expiry as well as all the stocks that you should be keeping on your radar this morning. So be right back.
Welcome back, and you're watching Market Cafe on ET Now. Now, me and Sneha are going to take you all through a lot of brokerages that have come in today, this morning, and a lot of stocks that are going to be in focus because of that. So let me start with the first one. We have Voltas that's going to be in focus after Macquarie has come out with a note where they're maintaining a neutral rating. They've hiked the target to 852 rupees per share. They believe the rise in competition for AC market share, the unitary cooling product margin pressure persists versus historical levels. They believe subdued near-term demand could be coming in for the RAC segment. Margins in the project front, maybe that could be a slight bit of a disappointment on that front. But overall, yes, maintaining a neutral rating and hike the target price to 852 rupees per share.
Well, Vinny, that was Voltas. Now let's talk about Senco Gold, and MK has come out with a view on Senco Gold. They've initiated coverage on this stock with a buy rating and given the target of 630 rupees, which is much higher than the current market price. They say that the low share in its stronghold East should improve, and focused non-East entry offers growth runway for the company as well. Lightweight strength of the jewelry ensures best accessibility is the word coming in from MK, and new retail formats for catering to Gen Z customers customers should also be another tailwind for the company. They also say that the return ratios are in line with most organized players from this segment. So that was MK's view on Senco Gold.
Okay, that was MK's view on Semco Gold, but let's also talk about Nykaa because we have a note that is coming from Morgan Stanley, and let's not forget Nykaa has been a bit subdued in the last 1 year in terms of a performance that has come in. Morgan Stanley is maintaining an overweight rating but cut the target price by 2 rupees per share, where they're giving a new target price of 173 rupees per share. They believe the structural increase in beauty spending is visible in India. Medium term, the thesis for beauty business is something that will be aiding. The fashion business has been a bit sluggish, and that is something that they're watching out for as well. That's a bit of a concern in terms of the trigger for the earnings cut for FY26 and FY25 to FY26. So maybe let's keep an eye out on that one.
All right, let's take a breather when it comes to all those brokerage notes then, because now we are joined in our studios by Ansh. So Ansh, take us through all the important stocks that are going to be in focus today.
Sure. So HFCL will be the first stock in focus for today's trading session, as company has launched IBR fiber cables to accelerate UK fiber build plans. This is particularly useful in crowded urban areas. Apart from this, Infosys will be in focus as a company and NVIDIA are collaborating to enhance enterprise productivity through generative AI. Zydus will also be in focus as company has received final US FDA approval for a gel which is used for acne treatment. Biocon Biologics will also be in focus as they have received European Commission approval for Yesafili, a treatment for visual impairment. Indo Amines has commenced continuous production of allopathic amines with a startup capacity of 300 MT per month. Lastly, Cipla will be in focus as FDA had conducted an inspection at one of the company's manufacturing facility, post which they have received 5 observations in Form 483. Company has said that they will be working closely with US FDA to address these observations.
Okay, thank you so much for that, Ansh. That was surely on in terms of the front of the stocks to watch out for. But could you give us an update in terms of the FNO front as well? What's the FNO snapshot this morning that we should watch out for?
Sure. So we'll start with Nifty first. Nifty in the previous session has given a decisive breakdown from 20,000 mark, which was holding on to many traders' optimism actually. However, on the downside, it took some support at around 19,850, which is a key level to watch. Now let's see what happened in FNO segment. Long unwinding was seen in Nifty futures with open interest dropping by 11%. This is huge actually. This indicates that bulls have actually they're losing the grip over the market. Whereas on option front, we saw good put buying at 19,900 strike, indicating traders expecting Nifty to go decisively below this level. Whereas on call side, strong call writing is seen at 20,000 mark of over 3.2 lakh contracts, indicating strong resistance around this psychological level. Now let's shift our focus to what FIS did. In index futures, they covered 30,000 long contracts, showing strong indication of bulls losing the battle. This resulted in a significant drop in total FI holding as well, from 65% straight to 61%. On option front, this is important data. We saw net call of minus 1.4 lakh contract and net put of minus 96,000 contract. Hence, in value terms, FI index option selling was over 56,000 crore. This is the highest level of net selling in options seen in at least past 3 years by FIIs. This suggests that call traders and put traders are expecting some small move, limited move in the market. So in a nutshell, F&O data shows some skepticism in the market and bulls losing the grip over the market. However, 19,850, which was the old resistance of Nifty, can act as a cushion to the falling prices. Also for broader indices, mid-cap and small-cap are 1-2% away from its 20 DMA support. So we still have some hopes in the market.
All right, Ansh, thanks so much for taking us through that. With that, let's continue with all those stocks and sectors that the brokerages are keeping on their radar this morning. And now let's talk about cement, because Bernstein is keeping the entire cement space in focus. They say that cement has outperformed the market by 10% in the last 1 year itself. The infrastructure investment cycle has been well understood, and the increasing pressure from coal prices and new capacity will also pan out for the cement sector. And they also say that Shree Cement doesn't warrant valuation premium. With that, let's also take a look at the individual cement stocks that Bernstein is keeping on their radar. For UltraTech Cement, their stance is market perform with a target price of 8,256 rupees. Same coming in for Ambuja Cement, a market perform stance with a target price of 424 rupees. And for Shree Cement, they have maintained an underperform stance with a target price of 22,341.
Okay, surely keeping an eye out on those stocks on the back of the Princeton report as well. But with that, viewers, we're absolutely out of time on this edition of Market Cafe on ET Now. And as we leave you, Gift Nifty is indicating a bit of a muted start, down to 0.25%. As of now, don't go anywhere. The markets will take the action forward.